With us, the MD and CEO at Union Bank of India, a.manimekhalai, joining in on the show right now to talk about how their numbers have been. Let me first start with, the first quarter, which, ma'am, typically is a soft one, and you've actually grown faster than your earlier guidance as well. Can we expect an upward revision then to your growth guidance?
See, we had actually given a guidance of 10 to 12% growth in advances, and we have grown by 12.33%. I can say that this is a little bit of base effect also, and deposit also we have grown by 13.63% as against whatever guidance we have given of 8.10%, 8 to 10%. So this is the growth parameters. However, QOQ, if you see, the growth is to the tune of almost 1% growth is what we have shown over QOQ. And this will be slightly moderated, and we will be keeping in the whatever guidance that we have given for the year, whatever guidance we have given, we will keep our growth rates to that tune only. Now, looking at the the GDP growth of 6 to 6.5%, based on that GDP growth, what we are looking at, we have also moderated our growth accordingly, where we have said the growth in advances will be the tune of 10 to 12%, and deposits will be the tune of 8 to 10% growth. Now, however, we have grown deposits to the tune of 13.63% in the first quarter. RAM has done very well at 14.92%. Advances has grown by 12.33%. And we hope that going forward also, because there is a first quarter is usually a slack quarter, in spite of that, we have done well. And going forward, we will see that we better our results.
So last time we spoke to you, you had suggested that 50% of the floating loan book was repriced. Walk us through that. How much of repricing is still done and how much is left?
See, as I told you last time, in the Q1, about 47,000 of my total loan book, the total loan book which has to be repriced, is close to about 2,76,000 crores. Out of that, we have repriced about 47,000 crores right now. And in Q2, we have got another substantial number, and Q3 and Q4 also. So 50% of my domestic advance is classified under MCLR, and we hope that we will be able to keep the NIM at 3%, whatever we have promised in the beginning of the year.
So take us how through competition is on the deposit front. Do you think that the cost of deposits have peaked?
No, the cost of deposit has slightly gone up over the last quarter, of course. But we hope to maintain the, we are looking at growing the deposits through our low-cost deposits. That is about CASA and savings deposit is what our prime concern is. If you look at my composition of deposits, 73% of my deposits are CASA and retail term deposit, and the bulk portion is only 27%. We will, going forward, we will moderate the bulk deposit part of it, which is about 27%, try to bring it down further, but have a better growth on our CASA and retail term deposit, which is, much cheaper than the bulk term deposit. As and when we have a, good takeoff in the advances, we may come and take bulk deposits. Now, if you look at even my LCR is a tune of about 160%, so I'm comfortable liquidity I have. So I do not have to, take bulk deposits later also.
Also guided for 16,000 crores in recoveries for the full year, out of which 3,600 are already done in the first quarter. Are you then confident of meeting that target?
I'm sure of meeting the target. In fact, if you look at what the recovery was last year, it was more than 20,000 crores is what we did in the FY23. And even in the current year, we have done, 3,564. But it is less than the guidance that we had given ourselves, internal guidance that we had given to ourselves with regard to, recovery. And we are sure that we will be able to meet that 16,000 crores of guidance that we have given for FY24.
Will credit costs be within the range of 1% for FY24?
Yes, we have as of now brought it down below 1% actually. It is 0.97% for the June quarter. And we are, forecasting to reduce the credit cost further for the current year. We are arresting slippages. We are, recovering quite a lot of one. We are going in RAM sector, which is, in high yielding advances. So we are looking to keep the credit cost to 1 or below 1%.
And what about the ECL provisioning, if at all implemented? How do you gauge the impact of that?
No, ECL, RBI is bringing at time to time, just to see that the balance sheets of the bank are in the best, with the high PCR and the low NPA ratios and the strong capital adequacy that the bank has got. We are sure that, as and when the ECL provisions come on to us, we will be well provided, and, they are going to give us 5 years period, and so we will be able to take care of this. The final guidance of ECL framework from RBI is expected to be in 2024, and we will get about 12 months time to migrate to that norms. But as on now, the bank is taking into account the ECL provisioning, and we are creating a little bit of buffer provisioning. So as and when the guidelines come from the RBI, we will be surely able to take that kind of a hit.
Right. Last we spoke, you had suggested that you were hoping to reach an ROA of 0.75% by the end of the fiscal. You've already clocked 1%. Can we expect then 1% plus ROA for the rest of the financial year?
No, we have done well in this quarter with regard to profitability. So we have clocked ROA of 1% in June 2023 compared to what we had done of 0.53 in the last financial FY23 June. But we will be, around 85 to 1%. That's what I'm hoping to during the current year. And we had guided ourselves that by March 25 we should be able to reach 1% of ROA.
All right. Thank you so much for joining in and giving us a view on how things are shaping up at Union Bank. That's the management as well, looking to improve their results. NIMs at about 3% is what they're looking to settle in at, and maintain their growth guidance of about 10 to 12% in advances. The stock holding out in the green. But just let's revisit what's